Welcome to our new video on venture capitalism, an often mysterious concept. We will cover venture capitalism in depth, break it down simply so everyone can understand, and reveal some interesting secrets behind it. We at CCA Financial Education strive to provide quality financial education for all people around the world. What is venture capitalism? Venture capitalism is a form of private equity, funding, or experience that large investors provide to startup companies that are believed to have growing potential. In return, these investors get partial ownership of the company and can have a say in decisions. Think of the show Shark Tank and how the sharks give money to gain a part of the company. That is an example of venture capitalism. Well, is venture capitalism a good idea? Well, for smaller startups, venture capitalists can provide great funding as well as useful technical and managerial experience. With a venture capitalist, you're usually allowed to access the investor's network for assistance as well. The trade-off to venture capitalism is that you are trading partial ownership of your company, so you can get help with scaling your business and increasing the margins of your profit. Venture capitalists invest in startups and typically acquire stakes that are less than 50% of a company's equity. Venture capitalism portfolios cover diverse companies and are extremely popular in the tech sector. This type of capitalism invests in companies that have yet to generate significant revenue or profits, and instead generates a return when a portfolio company is sold or taken public. Angel investors are wealthy individual investors who invest in companies in very early stages, earlier than venture funds. These people are interested in startups, typically in tech, and can often be friends, family, or other associates. If you have an idea, then you should look for angel investors. If you have a company, you should look for venture funds. Lastly, private equity invests in established businesses and often prefers financially distressed companies. It takes a majority stake in a portfolio company and almost always participates actively in management and operation of portfolio companies, generating a return when the portfolio company is sold or taken public. So how can you invest in venture capital? Investing in venture capital is pretty simple. It's similar to investing in any other hedge fund, so there are venture capital firms dedicated to researching and determining the most reliable up-and-coming companies. However, if you would prefer to invest directly into a startup, then that would make you an angel investor. There are many successful examples of venture capitalism. Google Ventures is an example of a successful VC that has invested wisely. Some of their more famous ventures are Uber and Nest. WhatsApp was a company that had tremendous VC backing, and when Facebook bought them out for $22 billion, these VCs made billions of dollars in profit. Speaking of Facebook, the company itself brought great success to the VCs supporting it. Excel Partners and the Briar Capital both helped Facebook with $12.5 million in their early days. After 7 years and selling some of their stake in the company, Excel's stake in Facebook was worth over $9 billion. Talk about that for an impressive rate of return. Thank you for watching our video. I hope you have learned a lot about venture capitalism and how you can take advantage of it in your life.